Good morning, you're watching Market Cafe with me, Ankur, Mishra and Kanishka Sarkar. In next 1 hour, we'll bring you all the global as well as India's update that matters to you before opening of market. But let's get started with an eye on the globe. It was an action-packed weekend where Donald Trump was once again in the action. But Kanishka, how do you see the impact in the US market? How did it fare?
That's right. If you look at the futures, US equity futures, they were mostly flat on Sunday evening with the S&P 500 trading near that record high level. And like you said, it was a busy week of potential market moving news that's going to come ahead. Now, this futures move that's come is largely after all the three major averages, that is the major indices, notched their second straight to winning week. The S&P 500 that closed above that 6,000 level for the first time since February 21st, and it's now just less than 3% away from its record closing high. Like you said, this week is going to be packed with plenty of action, with opportunities either to reinforce or undermine the market's confidence. Now, today, officials from the US and China are expected to hold trade talks in London. That's what Donald Trump had announced on Friday. Apart from that, inflation data is something that we'll be watching out for, and that's key. That's going to have an impact on the market. But apart from that, how are things looking on the crude front, Ankur?
Crude also did rally after the news which has been there that US-China trade truce is set to happen and the meeting is awaited. Brent crude was trading above $64 and Brent crude was actually trading above $66 now, up around 4%. And if you talk about WTI, that was above $64. And not only crude, you would have seen renewed enthusiasm even in gold where it did move around 3,300 an ounce. If you talk about the rates where it closed on Friday, and this happened after 2 days of decline.
That's right. Now, as we have been discussing the Trump move, now in a major development, Donald Trump has announced that U.S. Treasury Secretary Scott Bessent and other senior officials will meet their Chinese counterparts in London to resume talks. Now, Bessent, joined by Commerce Secretary Howard Lutting and U.S. Trade Representative Jamieson Greer, will work to address the ongoing trade war between the two nations. Trump remains optimistic about the outcome and has stated on Truth Social that the meeting should go well. Now, despite the recent progress in Geneva, tensions remain over tariffs, rare earth mineral exports, and also semiconductor restrictions. China has raised concerns about U.S. actions like limiting Chinese tech access, while the Trump administration has accused Beijing of stalling key commitments. Now, the outcome of these talks could have a significant impact on the global economy as well.
Another question is the bromance between Musk and Trump is still brewing. Elon Musk appears to have deleted several explosive posts on X amid a growing feud with the former ally Donald Trump. For now, Musk's controversial post accusing Trump of links with Jeffrey Epstein was no longer visible. The post, which sparked backlash from White House, escalated the public spat between the two. Musk had also supported a call for Trump's impeachment, but that post was also deleted. The exact reason of the deletions remain unclear, but the move follows an intense week of online exchange between the two men, fueled by Musk's criticism of the Trump's big beautiful bill.
That's right. Let's keep it with that space. Now, Trump is saying that his relationship with Musk is over and warned of serious consequences if Musk backs Democrats opposing his sweeping tax and spending bill. In an interview, Trump made clear that he has no intention of repairing ties with the Tesla and SpaceX CEO, though he hasn't considered cutting Musk's government contracts. Trump also remains unfazed about the bill and remains confident of passing it by July 4th with growing GOP support.
But President Trump's sweeping travel ban on 12 countries takes effect tonight. The ban blocks entry from nations including Afghanistan, Iran, Libya, Haiti, citing terrorism risk, weak identity verification and visa overstays. Partial restrictions have hit 7 more countries like Cuba, Venezuela, The move echoes Trump's earlier form of travel ban and sparked backlash abroad. A judge responded by halting US visa issuance, calling the move disrespectful.
Moving on, the National Guard has arrived in Los Angeles after Trump ordered the deployment of 2,000 troops in response to escalating immigration protests. The move follows clashes between demonstrators and federal agents, leading to over 100 arrests. Trump federalized parts of California's National Guard, bypassing the governor who called the deployment unlawful and inflammatory. Now, the local leaders, including LA Mayor Karen Bass, have criticized the federal action, calling it an chaotic escalation.
While the European Central Bank can afford to pause and watch, says ECB policymaker Nagel, after 8 rate cuts in a year, including one last week, Nagel said that interest rates are now at neutral level, which is neither stimulating nor slowing the economy. With the inflation hitting the 2% target, he says policymakers now have maximum flexibility to respond as needed amid growth concerns.
All right, moving on. The US believes Russia's full retaliation for Ukraine's bold drone strike last weekend is still to come, and it's expected to be big. Now, reports suggest that Moscow is preparing a multi-pronged assault involving missiles and drones, possibly aimed at symbolic Ukrainian targets like government or intelligence buildings. Now, Friday's barrage on Kyiv may just be the start.
And in a jaw-dropping French Open final, Carlos staged a stunning comeback into defeat Jannik Sinner in 5 epic sets, capturing his 5th major title. Trailing 2 sets down and facing 3 match points, the 22-year-old Spaniard defied the odds in a dramatic 5-hour 29 minutes thriller, the longest final French Open history. The match saw both players exchange match points in the 4th set and had fans on the edge of their seats, including celebrities like Hoffman, Natalie Portman, Williams. It was the first time that Sinner lost a Grand Slam final, but 5th time in succession he has now lost to Alcaraz. But the match was so tight that Sinner won 193 points and the other side won 192. Also, over the weekend, Coco Gauff won the first French Open singles title of her career by fighting back to defeat world number 1 Sabalenka in a roller coaster final.
All right, then moving on. Even as Trump and Musk saga continues to make headlines, there is some good news for the tech billionaire. According to reports, the Indian Telecom Department has greenlit Musk-owned Starlink to provide commercial satellite services in India. Starlink is now the 3rd company after OneWeb and Reliance Jio, which have been approved for satellite communication services in India. Now, Sumita is here with all the details on this front.
This is a humongous development, big development so far as satellite communications in the country is a concern, and definitely a big win for Elon Musk-backed Starlink, as it has gotten that very crucial license from the Department of Telecommunications. Remember, this is the 3rd company after Reliance Jio and after OneWeb scored a similar license. So definitely now competition is going to heaten up in this segment of satellite communications. Remember, this this license that Starlink has been granted, it was held up since 2020. So Starlink has been waiting for receiving this license since 2022. The concerns that the Indian administration had, or the delays that resulted in a delay for granting this license, were around factors related to security and authentication and data storage within the country. But now that is sorted. Now it remains to be seen how soon can Starlink actually start commercial operations in the country. We're given to understand from sources that it's still going to be months before Starlink can actually begin satellite communications in the country. But at least in the next 10 to 15 days, according to reports, the company is likely to be granted trial spectrum in 15 to 20 days of applying for it. But definitely this move brings Starlink a step closer to establishing its commercial operations in the country. Remember, Starlink had Elon Musk had also sparred with Reliance Jio as far as allocation of spectrum is concerned. Starlink is at present in over 100 countries. But India is going to be specifically special for Starlink, given the fact that it has 900 million internet users. So that's going to be a huge area of operation for Starlink.
Thanks, Sumita, for all those details on Starlinks. But moving on, in an exclusive interaction, my colleague Anjali Palot caught up with Flipkart's Manjari Singhal to know about more new Flipkart minutes and what is the plan there, and also the roadmap for the company. Let's listen into that slice of conversation.
Minutes is just an ability to provide your offering much faster. If you look at 5 years back, e-commerce spoke of 3 days delivery. Now, horizontal platforms are delivering on the same day, next day, right? It's just a delighter if you can get the entire wide assortment in 10 minutes. I think where Flipkart stands out is their ability to understand demand by pin code, by region much better, and translate that into super hyper speed. And this is how we've been able to take advantage of our hyperlocal offering. In markets where we've seen our hyperlocal offerings to be well penetrated, we have enough dark stores, they are leading the growth for us. They are at a much higher growth than your equivalent other metro cities or tier 2 cities where we don't have that offering. So we do believe that being able to serve the need faster, the right need faster, will take us ahead in the future.
Right. So in these categories, FMCG, BPC, what's the share looking like between the quick commerce versus the broader website?
Sure. I think in the markets that we exist, I'm not at liberty to give numbers, but we are seeing roughly 10% higher growth in markets where we are present with the quick commerce offering versus not.
Okay. And I also want to talk about FMCG and general merchandise a bit, sir. We've seen the last few quarters being slow for FMCG overall, and that was largely an urban phenomena, while rural markets are, on the path of recovery. Want to understand at Flipkart, what are these trends translated to in terms of where you're seeing growth really?
Sure. I think while market is slightly slow, we are nowhere compared to being slow. We are growing really, really fast, not just in beauty and personal care, in FMCG in general. Where is it coming from? I think we are lucky to say that it's coming from both metro and non-metros.
Okay.
I think a lot of metro growth is being driven by speed as an offering. A lot of non-metro growth is being driven by providing the right value.
All right, then that's the word coming in from Flipkart. But moving on, the American trade delegation has extended its stay in India until June 10th for key negotiations on a proposed bilateral trade agreement. Both sides are in deep discussions aimed at boosting market access, lowering tariffs, and also non-tariff barriers, apart from easing trade in sectors like agriculture and automobiles. Let's get Sumita back to get us all the details on this.
That's right. Sources suggest that the U.S. trade delegation that's visiting India, that will be here till the June 10th of this month. Remember, U.S. is seeking to expedite these trade agreements, and the deadline for the 90-day pause on U.S. reciprocal tariffs that ends on July 8th. So India and the United States are engaged in intensive detailed negotiations to propel the details of that bilateral trade agreement. In fact, the U.S. delegation had earlier planned to visit India from 5th and 6th June, but now that's been extended by a couple of days. Remember, the Commerce Minister, Piyush Goyal, visited the United States, and he met with U.S. Commerce Secretary and USTR, U.S. Trade Representative, during his visit to the United States just a couple of days back, and he essentially suggested that both countries are committed to work together, and they desire to give preferential access to each other's businesses, and they're working towards a bilateral trade agreement. So expect these current negotiations that are going on to happen in these directions. Now, US has essentially demanded that the countries put their best negotiations by Wednesday, put their best offers by Wednesday, essentially, with respect to India. The United States is expecting lower barriers to the market access. They also want lower duties on auto and farm products as well. And India is seeking to reach a mutually beneficial trade deal, one that also benefits Indian businesses as well. It's essentially looking at seeking that relief from 26% tariffs. And India has, of course, raised concerns about duties on auto, agriculture, steel, and aluminum as well. So those conversations will, of course, be happening during this round of talks between the United States and India. So all eyes now on, when an official communication is released by the Ministry of Commerce as far as these negotiations are concerned.
Thanks, Sumita, for all those details. While US is overstaying in India, India is leaving no stone unturned in keeping good relations with other EU countries because India's External Affairs Minister S. Jaishankar is visiting France, EU and Belgium from June 8 to June 14. In France, he will mark 25 years of strategic ties, meet leaders and attend the Mediterranean Ricina dialogue. In Brussels, Jaishankar will hold talks with EU leaders, including top diplomats to advance India-EU cooperation. He will also meet Belgian officials and the Indian diaspora. The visit aims to boost ties across trade, tech and global affairs. Sumita, tell us more about this visit.
That's right. External Affairs Minister Dr. S. Jaishankar has started his official visit to France, Brussels and the European Union, and it goes on from the 8th till the 14th of June. Remember, this visit is essentially to boost trade ties with France, European Union, Belgium and reaffirm India's policy of zero tolerance against terrorism. Remember, this is coming in even as European Union and India are negotiating an FTA deal. European Union is preparing for a multipolar world trading order, and which is why it's looking at increasingly India's role in European Union supply chains expanding rapidly amidst US protectionist policies that are wreaking havoc all across the globe. India and Europe also expect to conclude FTA negotiations by 2025. And remember, India and France, as far as that is concerned, well, they are completing 25 years of strategic partnership. France's Dassault Aviation recently tied up with Tata for Rafale fuselage manufacturing in India. So these negotiations and of course these bilateral trade talks are going to be essential. But let's understand what's on the agenda. Like I stated, that this is coming in even as the European Union and India are engaged in finalizing an FTA. A European Union team was in India in May this year. Meanwhile, there will be discussions with the European Union's Vice President Kaja Kallas and of course with representatives from the European Commission. He will also be holding talks with Belgium's Deputy Prime Minister and Foreign Affairs Minister. And of course, other than that, the External Affairs Minister will be holding talks with his French counterpart as well. The Ministry of External Affairs, while releasing and relaying this release, stated that India-European Union strategic partnership has strengthened over the years across diverse sectors, and it's got a big boost with the first ever visit of the European Union College of Commissioners to India in February this year. And after that only, the momentum in ties between the two sides has increased.
All right, thank you, Sumita, for getting us all those details. But with that, it's time to take a very short breather on this edition of Market Cafe. But don't go anywhere. We'll be right back with an Asia Check. Stay tuned.
Forming, it's kind of a sea of green, barring Chinese market. You can see Kospi is up more than 1.5%, followed by Nikkei, which is also trading higher on the back of the good data which is coming. 0.2% contraction there in GDP compared to 0.7% which was the estimate. There you can see around 1% up on Nikkei. And similarly, if you see Hang Seng, that is also trading in green. In the morning, Hang Seng is up around 0.5%, more than 0.5% now. Actually, it's climbed up to 1.3%. And the only market where you can see a muted start is in China, where Shanghai is trading almost flat on the back of the news that US-China talks have been resumed. Even that is now slipped into the green, which means all the Asian markets are now performing better on the back of the news that US-China trade talks are likely to resume in London, where the announcement was made by US earlier in the weekend. But on the Japan, you can see that this one enthusiasm is coming on the back of the economic data, which is coming with steadier than expected, and Nifty implied open is also showing signs of green with 74 points up on Nifty implied open. So all in all, it's a green kind of a signal which is coming in from Asia Pacific markets, and also Nifty implied open is showing signs of green here. But speaking specifically upon Japan's economy, as I was telling you earlier, the data has come in the data has actually come into the comfort economy, where it is the shrinking almost 0.2% on an annualized basis in Q1, better than earlier estimate of 0.7% fall. The revised data shows GDP was actually flat quarter on quarter, helped by a surprise rebound in net trade. But it wasn't all good news. Exports slipped. Imports surged amid a 90-day US tariff truce, and government spending saw its sharpest drop in nearly 2 years. Still, consumer spending and business investment egged out modern gains, offering some signs of resilience in Japan. We also need to watch out what actually happens in Japan's central bank decision, which is set to meet on June 14th.
All right, that's the fine print as far as Japan GDP data is concerned. But with that, let's slip into news for the hearing impaired.
Modi 3.0
of Shashidhar Jagdishan, and that is a claim made by the trust calling for suspension on allegations of fraud linked to the trust, and where it came from. Actually, they claim to have got a court order where the police have been directed to file an FIR. But what is the version of HDFC Bank? HDFC Bank has clearly called this to attempt to malign their image, and HDFC Bank unequivocally rejects and strongly condemns the malicious and baseless allegations which has been filed against them. In fact, they have said that this is completely false, outrageous, and constitute and misuse of legal process. The bank is also claiming that there is a due which is of 65 crore and the party does not want to pay it, and hence all these attempts have been made. In fact, High Court had also rejected such kind of an attempt earlier. And if you talk about the charges, there is a charge on MD and CEO that he has received more than 2 crore for harassing the family. Now this has been claims which has been filed by the trust earlier. There were two parties which were claiming their control on the trust, and finally on Saturday evening there was a press conference which was called by the Leelavati Hospital Trust, and they have now filed charges on Shashidhar Jagdishan. So all in all, this still remains in limbo, while bank is clearly denying all these charges. But moving on, as the Reserve Bank of India cuts 50 basis point rate in the June MPC meet, let's understand what are the implications of this rate cut. What are the key inferences? Abhishek is joining in to analyze all this and lots more. Abhishek, now Reserve Bank of India has fired this. Yes. Expectation was 25 basis point of rate cut. 50 basis point has come. Not only that, CRR reduction. It was a long demand of banks that CRR cut should be there. In fact, some demand that CRR should not be there at all. But 100 basis point cut there. Everything has been front loaded. What does this signify?
This is the most important thing, that everything has been front loaded. Why I'm saying that, because here what is clearly visible is that the RBI is giving us signal that whatever it is planning to do in the next 3 to 6 months or going forward, that is quite clear at the hand of the investors and the and other industry players. Second thing is that on this issue of growth, now RBI and the government is appearing on the same page. Say for example, in the union budget, government has given a kind of interest rate benefit to the consumers to increase the disposable income of the consumer to give spur to the consumption cycle. Similarly, now RBI has cut down the interest rate, and it is a front-loaded kind of a thing. So consumption cycle may get some kind of a boost from that. Second, on the other hand, the industry players will also have a clarity that what kind of interest rate cycle they will see in the coming period. So according to that, they can plan their capex cycle. So on some point of a time, we may see some kind of advancement in their capex plans also, which was dependent on the funding issue. Third thing is that the bond market is also getting a clarity that what would be the interest rate risk or the interest rate volatility that they may see in the coming years. So I don't say that it will stabilize the bond market or the yields, but some kind of a clarity is that they are quite assured on one risk factor, that is the interest rate volatility. And third thing is that now with this CRR cut, you have the adequate liquidity in the system. With interest rate cut and the CRR cut, somehow you are saving the needs of the banking system also. So with this, I think it is a complete package that is available with the market, with the industry players, and with the consumers. Now the next leg which we have to see is that how at what point of a time all these things will start filtering into either into the consumption or into the capex cycle.
More importantly, how will it translate into the banking system? Because at least 37 to 40% is still linked to floating rates, where the passage has not happened, and the Reserve Bank have been worried about that. But let's shift focus. Globally, there is a divergence. On one hand, you have seen ECB, which has cut rates. There was contemplation by at least Donald Trump saying again and again, cut rates, but America is not doing that. I mean, till now, the expectation is that only in September and December, if this may happen. India has now said, I have front-loaded over to government or anyone else for growth. How this kind of scenario is working globally?
On global front, if I can say 2025 is a very peculiar year, then the facts will also justify that. This is the year when the countries like India and the RBI, ECBs are cutting rates. Our ECB has cut down rate for almost 8 times in last 12 months, and similarly India has cut down almost 100 bips kind of rates in since beginning of 2025. On the other hand, Japan has increased rate in January, and US has not taken any call so far on the interest rate side. So what this is saying that either it is a part of this deglobalization thing, and to handle the domestic issues first, then think about the overseas market. And second thing is that individual countries are addressing their own issues. So it is the outcome of this proposed deglobalization or the tariff war started by the US. And second is that individual countries are handling their domestic concern first, which may result into the differential change in the differential between the yields between the global players. Say for example, the differential rate between the US and the Indian yield has been narrowing down, and this would result into the fund flow from one country to the another, and this is the way in which the individual country will attract the foreign money into their country. So say for example, if in Japan has increased rate by 25 bips in January, if further it will increase rate by 25 bips, then definitely yen unwinding kind of a concern will be seen. So there is a dichotomy, but at some point of a time, the synchronism will come into the play when some kind of a clarity about this tariff war will come into the picture.
And let me add, Reserve Bank of Australia also there. They were also holding the rate, and the tone was extremely hawkish. If you talk about the minutes which was released last week, and even in our country, you would have seen the press conference of Reserve Bank of India. The governor, when I asked him that what are you doing in the cricket terminology, you hit 2 sixes and came back to the crease, now you're saying you're ready to do anything. So the tone which was there in Reserve Bank of India's press conference and also in the statement was clearly indicating that Reserve Bank is keeping itself ready according to the needs which may arise after next few policies, which the next policy it is clearly signaled that there may or may not be any action because everything is front loaded. Now, depending on the data which is coming in, depending on the steps which are taken by India and US as well as India EU, the kind of trade talks that happen, and more importantly, if the elephant of inflation is coming back or not, because right now it is comfortably below 4% and that will decide the future of rate trajectory in India. But for now, Reserve Bank of India has clearly held with front loading in the policy rates, whether you talk about CRR, whether you talk about repo rate, and that is the stance which has been taken by Reserve Bank of India. But Abhishek, one more thing you would have noticed in our policy this time, there was a change of stance. Yes. Why it was debated? Last time, change of stance happened from neutral to accommodative. This time, accommodative to neutral. What did you read between the lines?
See, somehow what I can say that, and with that, they haven't changed this GDP growth estimate. Yes. So somehow they are taking into consideration the concerns which may come because of this geopolitical issues. Say, for example, so far this trade talk or the tariff or the Trump tariff has been paused till 9th of July, and things are going on. Talks are there. China, US are still in the talk. At this point of time, it is not clear that in which direction things will play out, although the things are quite easy compared to that of what was in the March or April, but the outcome or the absolute outcome has yet to come out, and I think somehow RBI is waiting for that outcome to take a broader call on the direction in which the overall GDP will play out.
That is why he is holding the bat. In any direction he can play depending on the need. But yes, the path is clear for Reserve Bank of India, at least in India, that they have taken action. They will wait for the data to come in, and as per the data, they will act further in the year. But Abhishek, thank you so much for joining in and explaining in detail about the policy action, not only in India but also globally. But moving on, Abhishek, let's stay on with this. Let's stay on and tell us what next you are seeing on, if you talk about other things as well as the global central banks. We have also seen that the kind of divergence which is there. Do you think in future there might be scenario that the global trend of central banks may not continue and individual countries may take action, as you were talking about the divergence that will come into play this year itself?
See, divergence has been in the on the system. What we are expecting that at some point of a time when the globe will have a clarity about this tariff war and the overall geopolitical issues, at that point of a time we may see a kind of a synchronicity between this monetary policies across the globe. But till then we may see this kind of a divergence because individual country is saving their interest first, then they are thinking about their global trading position.
All right. Thank you so much, Abhishek, for joining us and explaining all the scenario that we can expect both in India and globally. But with that, let's shift focus to some corporates now. Now, Tata Steel's FY25 annual report has outlined aggressive capital and cost strategies. CapEx is pegged at more than 15,000 crore rupees for FY26, with 75% for next year's spend focused on India. Debt reduction remains a priority, and transition plans in the UK and Netherlands aim to boost efficiency and sustainability. Ashesha is joining us with all the details.
Well, yes, Tata Steel will be in focus today, and this is because the management has reiterated their capex, cost reduction and deleveraging plan for the next few years in the annual report that they released over the weekend. And first up, let's talk about capex. Remember, they incurred capex of about 15,670 odd crores in the year gone by. They are planning 15,000 crores of capex for this year as well. 75% will be for India operations and the balance 25% will be for European operations. Now, as far as capex plans in India is concerned, remember they are looking to expand their Kalinganagar facility, EAF project in Ludhiana, and Neelachal Ispat, their recent acquisition and its growth plans will also be on company's radar for the next few years. So these are the major capex plans that the company has for the next few years. As far as cost reduction program is concerned, remember the management had highlighted this in the earnings call after their Q4 results, where they said that they reduced costs by about 6,200 crores in FY25. They are planning to reduce their costs by another 11,500 crores in FY26 as well. This will be across their operations, both India as well as Europe, which includes UK as well as Netherlands. Now, as far as deleveraging plan is concerned, remember they reduced debt by about 6,200 crores in the second half of FY25, and this is likely to continue going forward as well. Remember, they have not given any figure or debt reduction target, but they say that increasing cash flows will help company lower the debt going forward. As far as UK transition is concerned, they've given a proper timeline where they say that 2 blast furnaces at Port Talbot have already been commissioned. Construction of the EAF plant is likely to commission next month, that is in July 2025, and the plant is likely to be commissioned in 2028. So they've given a fair roadmap of where UK transition is headed, and as far as Netherlands transition is concerned, they are still in discussion with Dutch government in order to ensure smooth transition from the current manufacturing process to EAF. So they've highlighted their plans, capex and deleveraging plans, which look quite promising, and deleveraging continues to remain in focus with transition in both UK as well as Netherlands.
Thanks, Ashisha, for all those details. Now, Garden Reach will be in focus today as Indian Navy commissions the first anti-submarine warfare shallow watercraft. We will also look at some of the recent MOUs and order wins that company has secured. Sharad is here with more details.
In focus is Garden Reach Shipbuilders, and a slew of MOUs and order wins have been announced recently. And of course, today the company will be in focus as Indian Navy is all set to commission the first anti-submarine warfare shallow watercraft. And importantly, the 3 MOUs and order wins which have been signed recently. The first one is an MOU signed with Burge Propulsion from Sweden and Sunstone from Denmark, and this is for marine propulsion systems. Another MOU signed with Sunstone Denmark, and this is to expedite the cruise vessels. Now, our company recently was an L1 bidder also for construction of next generation corvettes, with the value coming in around 25,000 odd crore rupees. Now, interestingly, the management spoke with ET now a week ago, and FY26 they're expecting to be a peak revenue year, while the momentum is expected to be strong for FY27 as well. Strong returns has also come in for the investors. Over the last 1 month, the stock has jumped 82%, and a year-to-date basis almost double. And 1 year basis, it's up 150%. So a very strong rally coming when it comes to the shipping and the defense space recently, with the rise in geopolitical tension and India becoming a hotbed for exports as well.
All right, thank you, Sharad, for getting us all those details. But now time to shift focus to some block deals. Now, Suzlon's founding family is set to offload up to 200 million shares, or 1.47% of the company's equity via secondary share sale, worth almost 1,300 crore rupees. Anurag Joshi is joining us on the phone line to get us all the details there.
Suzlon's promoters, led by Vinod R. Tanti, are planning to sell shares through a secondary block deal. Now, the size of this deal is 200 million shares, and that's almost 1.5% of the existing shareholding of the company. The deal is likely to close today. And if we look at some of the detailing on the transaction, the offer size is almost 1,300 crore rupees, which is about $151 million. And the floor price at which the transaction is in the market is at 64.75 rupees a share. That's actually at an almost 3% discount to the June 6th close on NSE. The brokers of the transaction are ICICI Securities and Motilal Oswal Investment Advisors. The expected trade is today.
Thank you so much for bringing those details, Anurag, and he has been consistently breaking these deals before it hits market. But moving on, let's look at Mahanagar Gas analyst meet. Novama has come out with a report on the key takeaways from the meeting, where the management has laid down the expectation for the healthy volume growth. Varun is here with more details. Good morning, Varun. Take it away.
Good morning, Ankur. So yes, Mahanagar Gas had an analyst meet on the 6th of this month, and there are several reports on that. Especially, Novama has come out with a note which says that the management expects the overall healthy volume growth to continue because of expansion on infra, targeting marketing, and also CNG competitiveness picking up going ahead. But the overall margins could be under pressure. Now, what would margins be under pressure? This is because of the sourcing mix shift. Now, the sourcing mix is expected to worsen as the share of new well gas, that is, priced at 20% premium to the APM gas, that is expected to rise going ahead, and that would actually dent the overall margins of this city gas distribution company, especially MGL in per se. Also, the report says that you can see going ahead that the sector would go through a consolidation phase, although the company is saying that it would maintain the 10% plus YOY margin, YOY volume growth in the next 2 to 3 years, and the EV space also has a limited overlap with a typical CNG customer base. The company expects by FY30 the company would aim to add around 250 CNG filling stations and also upgrade the existing stations. Also, the 1 gigawatt battery manufacturing facility that would entail a capex of around 900 crores, and that would start in next 12 to 14 months. Also, the company says that the biogas plant and also the LNG business, the segments are at initial stage, and the company believes in scaling up this business in the next few years. Although several reports have come, Novama has actually reduced the target from 1305 to 1224. They have a reduced call. Ambit, Axis, they have raised their overall target, and Motilal Oswal, they have a buy call with a target of 1760. So the volumes are going to be good. That's what the management says. But yes, the brokerage houses believe that because of the sourcing mix, the margins are going to take a hit in coming years.
All right, thank you, Varun, for getting us all those details. But it's time now to take a look at all the stocks that are going to be in focus today. Rabinder is joining us with this list.
Well, as MCX can be in focus, where company has received approval from the SEBI to launch electricity derivative. So back of this, MCX can be in focus. Apart from this, Lupin can be in focus, where Lupin has received tentative approval from US FDA for one of its tablet, and the tablet is used for the treatment of partial onset seizures in patients 6 years of age and older. Apart from this, NHPC can be in focus, where NHPC declares commercial operation of third phase of part capacity of 53.57 megawatt of 300 megawatt Kanishka solar power project Bikaner, and the cumulative commercial operation capacity of above project has reached to 160.71 megawatt out of total of 300 megawatt. Moving to next, Railtel Corporation can be in focus, where company has received 2 work order. First work order has received from the Department of Education Samarkand Shiksha for supply of rupees 16 crore, and the second work order from the State Project Director Bihar Education Project Council for supply of amount of rupees 243. So back of this, Railtel Corporation can be in focus. Moving to next, RITES can be in focus, where RITES and Hindustan Copper has signed a MOU to jointly develop a rapid, reliable and sustainable supply chain of metals, minerals, and including critical minerals in India and overseas. Apart from this, Bharat Electronic can be in focus, where BEL and Tata Electronic has signed a MOU to advance India's ambitions for self-reliance in electronics and semiconductors. And lastly, Infosys can be in focus, where company has clears rupees 32,403 crore GST case as DGGIS closed proceedings. So back of this, Infosys can be in focus.
Thank you so much for giving all those details, and I hope viewers, you have taken a note of all these stocks before opening of the trade. But moving on, the Indian government has imposed anti-dumping duties on imports of vitamin A, palmitate and insoluble sulfur from China, Japan, Switzerland and European Union. The move aims to protect domestic manufacturers from low-priced imports and affect the local industry. Sharad is joining in with more details on this story.
A very positive development coming in when it comes to for the importers of insoluble sulfur and vitamin A palmites. Now, India has actually imposed these anti-dumping duties, and this is for the imports of China and Japan when it comes to the insoluble sulfur imports and vitamin A palmitate from China, European Union and Switzerland. Of course, the DGTR action has come in, and these duties will be placed for the next 5 years. Now, insoluble sulfur is a very important component which is used by tire manufacturers to improve the rubber vulcanization, while vitamin A is actually used in fortified foods and pharma industry. Now, the duty change itself, the numbers for vitamin A palmitate, that has the range between 87 cents to almost $21 per kg, and for insoluble sulfur, the duty range is coming between $259 to $358 per metric ton. But the impact analysis is more important. Sulfur importers are tire companies. Apollo, MRF, JK Tyres, they are one of the largest importers of this product, and they are likely to benefit as the industry, the domestic industry, gets a push. Now, also in chemicals, it's very important, especially Oriental Carbon Chemical, Coromandel, PI, Navin Fluorine, and even Paradeep Phosphates. The numbers are of course ranging, but of course these sulfur importers and chemicals are also likely to benefit. And from the pharma space, two names are there: vitamin A palmitate imports, Piramal Pharma among the larger names, and in the smaller names it's Fermenta Biotech. So these stocks would be in focus.
All right, thank you, Sharath, for getting us all those details. But with that, it's time to wrap this edition of Market Cafe. It's a goodbye from me and Ankur and the entire team that puts the show together. But stay tuned as the market is coming up next.